Ladies and gentlemen, good day and welcome to Pennar Industries Q3 FY23 earnings conference call hosted by PhillipCapital India Private Limited. This conference call may contain forward-looking statements about the company which are based on beliefs, opinions and expectations of the company as on the date of this call. These statements are not the guarantees of future performance and involve risks and uncertainties that are difficult to predict. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Vikram from PhillipCapital India Private Limited. Thank you and over to you, sir.
Thank you, Seema. Good morning and very warm welcome to everyone. Thank you for being on a call of Pennar Industries Limited. We are happy to have with us the management of Pennar Industries for question and answer session with the investment community. The management is represented by Mr. Aditya Rao, Vice Chairman and Managing Director, Mr. Srikanth Bakkar, Vice President Finance, Mr. J. Krishna Prasad, Chief Financial Officer, Manoj, Head Corporate Affairs, and Mr. K. M. Sunil. Before we start with the question and answer session, we'll have opening comments from the management. Now I hand over call to Mr. Aditya for opening comments. Over to you, sir.
Thank you, Vikram. Moderators, thank you again. Warm welcome to all our stakeholders. Thank you for your presence today on Pennar Industries Q3 FY23 financial results. The conference call will follow our usual structure. First, I will start with my commentary on our financial results, covering our profitability, our liquidity, and our growth. Following this, our CFOs, Mr. Srikanth Bakkar and Mr. Krishna Prasad, will present their overview. After this, we'll open up the call for questions. So, for an overview, for the third quarter, we recorded net sales of 692 crores. Our PBT was 27.54 crores. This represents growth of 97% over the comparable quarter the previous year. We saw some moderation in revenue on a sequential quarter basis, Q2 to Q3. This was due to low margin revenue being removed, replaced by higher margin revenue streams. We are confident we'll achieve our financial year targets and scale our PBT further in the fourth quarter. We will close the year strongly with our best ever operational PBT. Our Q3 PBT of 27.54 crores with a margin of 3.98%. We expect further improvements in our PBT as we scale our higher margin deals at the expense of our lower margin business units. We generated a cash PAT of 37.41 crores, which was at a margin of 5.4%. And we're continuing to work on scaling our margins and our PBT value. That covers our profitability, liquidity and capital efficiency. So we cover our working capital days and our ROS. We're currently at 77 days working capital and expect to reach 75 days by the end of this financial year. Our annualized ROS for Q3 was 19% and we expect to reach 20% ROS by the end of this financial year on an annualized quarter basis. It will not be 20% for the year, but 20% in the annualized quarter, fourth quarter. That completes our liquidity and capital efficiency discussion. On our growth drivers, for the next few quarters, we expect a body in white business, our pre-engineered building business, both in India and the US, and our engineering services business to grow. We're also working on our expansion of our module project, which will be commissioned in the next financial year and will substantially grow our revenue and PBT. I'm thankful to all of you for your time and attention. We'll continue to focus on profitability growth, liquidity and capital efficiency. I would like to hand over the call to our CFOs for their comments. Srikanth.
Yeah. Welcome to shareholders for the third quarter financial results for the quarter and the 9 months ended FY23. The key metrics would like to just inform you in terms of revenue. We have increased from 532.97 crores to 692.22 crores with a growth of about 30%. EBITDA has increased from 46.94 to 66 crores, about 40% increase in terms of percentage. It has increased from 9.53% to 8.81%. The PBT has increased from 14.13% to 27.54 crores. And in terms of PAT, it has increased from 10.71 to 21.11. The increase predominantly in terms of revenue, if you compare the Q3 versus the Q3, it's predominantly on account of the geographical expansion, which we've done in US. So a chunk of the revenue is coming from there. And also in India, the increase in the BIW business and the expansion in the higher profit making businesses in terms of steel BUs. We are happy to inform to the shareholders that we have crossed last year's annual PAT of 42 crores, what we have, and currently we have for the 9 months ended, we are at 52 crores, which itself is up by more than 20% if we compare year with the 9 months basis also. With this, we'll like to hand over the call to the moderator.
Thank you very much. We will now begin with the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone phone. If you wish to withdraw yourself from the question queue, you may press star and 2. Participants are requested to use handset while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. We take our first question from the line of Anika Mittal from Invest Research. Please go ahead.
Hello. Good morning, sir. Am I audible?
Not really. Could you maybe speak up a little?
Hello. Is it fine now?
Yeah, much better. Go ahead, please.
Okay. So my first question, can you please spend few minutes on competitive landscape for the industry you are operating in, along with your competitive advantage, which shall enable you to take the maximum orders from the upcoming opportunities, which is coming from the recent budget announced by FM?
So, the competitive landscape in many of our businesses is that they're dominated by mature large players. Very few of our businesses consist of competitive intensity where is very fragmented. So it would be difficult for me to answer the question across the entirety of our revenue streams because we have, as you may be aware, about 9 business units within the company. But I can say for the larger revenue streams, our competition are all, in India we compete with Kirby, we compete with Thermax, we compete with Tube Investments, and in the US we compete with Cornerstone, which is a multi-billion-dollar firm, and we compete with Whirlwind and others. Now, it's a complex relationship. A lot of our competitors are also our customers because we supply to Thermax. We have good relationships with them as well. So typically, we tend to get into industries which are mature, which can scale, and which have presence of large, well-structured corporates. So the competitive intensity doesn't rise to the level where you have to compromise on margins to good revenue. I will try to get a better answer to you later, but in the interest of time, I think, does that broadly answer your question?
Okay. And so second thing is for FY22 end, as per your annual report, your capital employed is 915 crore. That is basically the total of equity and your non-current liability. And earlier you have guided for 20% ROC, right? So for that to be true, you must generate EBIT of 185 kind of EBIT and EBITDA of around 250 crore, right? And for 9 months, EBITDA it is 150 crore. So do you think we will achieve 100 crore EBITDA in Q4 to that guidance to be held true?
So if you look at a capital employed right now, that number is
Close to 900.
It is 900 crores. So if you take our EBIT for the year, I think right now we would end up at, the 19-20% was on a quarter basis. For the year, we may be slightly below that because of Q1 and Q2 we were not at 19 or 20%. But we will not be giving an EBIT projection for the financial year, but you can assume improvements on Q3. So I'm quite confident that even if we don't touch 19-20, we'll be close to it for the whole year. For the quarter, as I mentioned in my initial comments, we will be above, 20% divided by 4. So we will be above 5% return on capital employed. Srikanth, if you...
Yeah. For 9 months ended FY23, we've already reached EBITDA of 183.86 crores.
Depreciation.
And then if we depreciation is close to around 47 crores. So we more or less we should be there is our view. We will still buy, but it will not be a substantial difference what we will have.
Can we achieve the level of that 17-18% kind of, not 20%? On overall year basis?
Or 17-18%, at EBITDA level we'll have close to around 9. Presently we're at 9.5.
No, he's asking about ROS.
Yeah, ROS 19%. We'll reach to 20%. Our target is to reach 20%, but
for to reach to 20%, you have to must do the EBITDA of 100 CR in quarter 4. So that's why I'm asking. So that's really a surprising number.
Yes, 900 crores, you did 180 crores in EBIT, right?
Yeah.
So our EBIT right now is not 90 crores. I'm confused why you would say we need to do 100 crores in...
No, actually I was talking in terms of EBITDA. EBITDA
is already 180.
Yeah, I think you may be looking at the wrong number. EBITDA for the year, for 9 months is not what you
for
see.
9
Are you
I think quarter number or for the 9 months ended. 9 months ended number is already at 183.
That's what we're trying to say. It's already at 183. So
actually I think there is some confusion. See, your EBITDA is your capital employed is 920 kind of, right? And to do an ROC of 20%, you must do the EBIT of 184. EBIT of 184, right?
Yeah.
Yes.
Right. And what is your 9 month EBIT?
100 and EBITDA. You add back depreciation.
EBIT, if you remove EBITDA,
depreciation 44.
So what is EBIT?
140.
140 is the EBIT.
So that's what I am asking. Will you do that kind of means remaining EBIT 184 CR?
No, it's not 100 crores. Where's your 100 crore number coming from?
That was the EBITDA thing. If you add back the depreciation to EBIT,
I will assure you we'll hit 20% ROS for the year. Okay, let's go move forward.
Okay. That's the way I was asking.
Okay, thanks. Any further questions, sir?
Yes, sir. Your revenues from outside India rose from 44 CR in 2021 to 472 CR in 2022. So my question is, what is this number in first 9 months? Basically, your outside India business number in the terms of top line for first 9 months.
Outside India, in India versus outside India is this the difference between the standalone and the consolidated. So 160 crores is the difference for the quarter-on-quarter if you take. That's predominantly 536 versus 692. So 536 crores is the India business and 692 is including the US business. So close to 160 is the entire difference that comes from there.
And second thing is, sir, what is driving this growth? Means how sustainable this is? Because considering the macro headwinds going on in Europe and USA, I'm not getting how we are able to deliver these fantastic numbers. So kindly give some color on that.
At this point, our US revenue, our international revenue seems to be quite robust. The reason why we are saying that is our order books are growing. There is, as I think you mentioned, there is talk of recession, but we are not seeing any sign of that in the markets that we are present in. Maybe in the tech sector, but at least outside the tech sector, we have not seen, at least for our addressable markets, we've not seen any decrease. In fact, our order books have gone up in January. And I am not hearing any talk of a decline in our revenue from our international businesses or a decline in their margins.
And sir, on the capacity front, what is our total capacity and capacity utilization across the different verticals? And are we considering any further capacity expansion or capex plans going forward?
So our capacity utilization, again, we are a little diversified. So I can give you an overall number which may not make much. I would ask you not to scale that number across the company. It's around 60-65%. But in several of our businesses, we are at capacity and we are adding capacity. That would include our PEB, it will include in India, it will include PEB in the US, it will include our module plant. And in some, we are under capacity, specifically in our steel BU and our older revenue streams. So Yeah.
So any CapEx extension plans, sir? Extension plans in any of the verticals you are considering?
Yeah, we will be scaling our body in white capacity over the next quarter, our pre-engineered building capacity in India and in the US as well. And we will also be increasing our module capacity. Those are from our engineering services business. Yes, we are building a larger delivery team in India as well. So we will need to.
So what can be the CapEx amount you will you are?
Mr. Mittal, may we request you to join the question queue, sir, as we have several participants waiting for their turn.
Sure.
Thank you, sir. We take the next question from the line of Deepak Poddar from Sapphire Capital. Please go ahead, sir, with your question.
Hello. Hello.
Deepak, you go ahead, please.
Yeah. Thank you very much, sir, for the opportunity. Sir, so first up, I just wanted to understand on the demand scenario or the demand environment, both in India as well as the international division. I mean, how do you see the traction in that demand or any kind of slowdown that you are seeing because of the global scenario? So some flavor or because of the inflation scenario. Some flavor on that would be very helpful, sir.
Thank you. So we are primarily present in the automotive sector, the building and infrastructure sector, railways and aerospace, and in the energy sectors. Taken together, that's a big chunk of the gross fixed capital formation in India and quite frankly in any country. So as I mentioned on my call, we don't see any problems in the US. We don't see any problems in Europe. I think while there has been talk of recessions and soft landings, from what I am seeing from an order book point of view, I am not seeing a reduction in demand as of right now. In our view, we will be able to sustain our revenue and profitability for the near term. We don't see any problem there. In India also, with the exception of some sectors such as railways, for example, a lot of we are hearing a lot. There was a railway budget, but I am not seeing much traction on the ground as far as orders to us are concerned. So in that we are seeing some moderation in railways. It doesn't comprise from a profitability point of view. It comprises less than 5%, so it's not a big deal so to say. But I don't have clarity on our railways business units revenue and profitability in the near term. Hopefully that changes. Our order books are quite strong, but that's not translating into revenue in railways. In India, the pre-engineered building sector is now at its record peak in terms of order book. In fact, we're adding capacity as quickly as we can. And as you may be aware, pre-engineered buildings captures basically any process industry, any in warehousing, logistics, any manufacturing industry, the end uses this. Any non-residential construction uses pre-engineered buildings. So we are not seeing a reduction there. Large order books here in India and in the US. So from a demand side, I'm not seeing a reduction in that business unit. Solar also is doing reasonably well for us. Profitability is increasing and improving. And we believe that this is not only us. I think all solar players are expanding their capacity. In fact, we would be a medium-sized player in this field. We would not be one of the larger players in this field. So, but I'm not across our major verticals, whether that be automotive or infrastructure or building construction, railways. I'm not seeing a reduction. Was I audible? Deepakji, did you?
Mr. Deepak?
Hello.
Yes, sir.
Oh, yeah. I understood. Sir, second question is in terms of your profitability. You mentioned that earlier as well that our second half profitability of that was achieved in the first half. So we are holding on to it.
Could you repeat that, sir? The second part, the second half. What? Sorry, I couldn't make out what you said.
Our second half PAT would be double of first half PAT. So are we holding on to that?
I'm not sure I said exactly that, but let me do the math. Give me a few seconds. Our PAT in the first half was?
Around 30 crores PAT was what we reported in the first half. And I think we were of the view that second half would be 2x of what we have reported in the first half.
Yeah, for the 9 months it is 51.58 in terms of PAT.
Okay.
And the quarter that we reported, the earlier quarter was 16. So
what is the
close to
first, so
35.
first and second, Q1 and Q2?
Q1, Q2, 35.
Yeah,
30 crores. Round about 30 crores. First half.
Yeah, 30 or something. So, yeah, I think we'll be close to that, if not entirely that. But
Close to that.
I would really not like to give guidance on this. What I would prefer to say is that Q4 will be stronger than Q3, that we are pretty sure of. So
Fair enough.
we have no surprises and profitable. It's just
Fair enough. Understood.
and all of those are, those are just numbers. I don't think we should.
Fair enough. I understand. And sir, anything on FY24? Any flavors that you can provide? I mean, in terms of even the top line thing, and how do we see the margins? Now we are coming to year end, right?
Again, I will not give guidance, but I can say FY24 will be better than FY23. That much I can say. And we are hard at work to improve our profitability and our capital efficiency. And we will report to you quarter on quarter exactly what our goals are. But as of right now, I would like to only comment that FY24 will be better than FY23.
Fair enough. I got it. Yep, that's it from my side, sir. Very helpful, and all the very best to you, sir.
Thank you, Deepak.
Thank you, sir. We take the next question from the line of Mr. Dev from Astute Investments. Please go ahead.
Good morning, sir. Am I audible?
Yeah, please go ahead.
Sure. So most of my questions are around your pre-engineered building division. So before I move on to fundamental questions, I just had one bookkeeping question. So I just wanted to check with you that, so in your segmental data, you report two divisions. One is diversified engineering and second is custom design building. So my understanding is this custom design building is entirely your pre-engineered business. Am I correct?
Yes.
Yeah, it is. But it may also include engineering services a little bit or no?
Yeah, very, very small part of it.
Okay.
Just 3%.
Yeah, broadly speaking, yes, sir. You're 95% right.
90% of that. Not entirely 100%, 90% of that.
Okay, sure, sir. So, sir, now I'll move on to the fundamental question. So, my first question is, if I look at your revenue growth, the margins which you have been doing in this pre-engineered building is much better as compared to the 9 months of FY22. So, if you can, give a broad understanding, and this has been the trend across the industry, all the players are reporting very good numbers. So, what is changing in the industry and what is leading to, this kind of growth in revenues and improvement in margins? If you can elaborate on that.
You're speaking specifically to the pre-engineered building business, sir?
Yes, sir.
Yeah. So I think the gross fixed capital formation story is increasing. I think the Indian government, if you see in the budget, government capex is increasing, which means we don't deal with the government directly, but it filters down to private sector capex immediately, ultimately. So whether it's warehousing, whether it's manufacturing plants, whether it's airports, there's a tremendous amount of new orders that are coming on, a new capacity that is coming on. I can't name names, but the quarter has been characterized by, I would say, 3 or 4 very large orders. Currently in our order book, 40-50% is only 2 or 3 players in PEB. That's both a risk and also a good thing in terms of it gives you tremendous ability to cater and make sure revenue goes to those players. And on the other side, of course, the risk of having, if not majority, a big chunk of your order book coming from only a few players. But in my opinion, all pre-engineered building companies are doing well right now because a lot of people in the process industries, warehousing and manufacturing are expanding capacity. I think that's the reason why everyone's order books are right now full.
Okay, sir. And sir, in the past, this industry has faced an issue of raw material price volatility. So I think FY18 you had done almost 14% EBIT, and then it has come down to almost 6% margins. So how are you, trying to change this volatility in margins? And do you think in future the margins will be much more stable, or this kind of volatility will continue because of the volatile raw material prices?
I think we are a pass-through, and we've learned the way to manage these risks now. So obviously, in our risk management every quarter, there's 4 risks we cover. One of those risks is raw material price escalations, which can be dangerous for our margins. But effectively, the combination of us booking raw material in advance, quarterly rate contracts which allow us some time to see a cost increase and then having to pass that on to our customers, and ultimately price escalation contracts, terms for raw material price escalation, terms in our contracts will make sure that we don't have an issue. Worst case scenario, we will have to go back to our customers and renegotiate if that ever happens, but that's extremely rare. So the combination is 4 or 5 things. I don't believe we will have an issue as far as raw material price variability potentially impacting margins is concerned, and that has been the case for the last 8 quarters, I think, in my opinion. So I think we understood how to deal with it. Very, very precipitous rises and falls obviously changes the equation a little bit, but I don't think that's what we're expecting right now.
So, sir, 2 related questions to this again. So, one, if you can share a number that how much of order book currently is the contracts which you have signed, the recent ones, what percentage of those have a contract for price pass-ons to the customers? If you can share that number. And second, so based on your explanation, do you think that this 9% margin which you have done on a 9-month, do you think you will be at least be able to sustain this margin, if not improve? So these are the 2 related questions.
US and India put together, the blend is coming as higher.
What 9 is what?
PBT.
PBT 9%.
US का ज़्यादा है, so US stuff is here included.
No. So what is 9%?
So based on the segmental data which you have, 9% is your PBIT margin for the pre-engineered building divisions on 9-month basis.
Okay. Yeah, because our US business is higher margin, I think we can safely say that will persist. I don't see an issue there. As to your question on what percentage of our order book we have price escalation for, I don't have that. It's a good question. I don't exactly have the answer right now. I'll get back to you on this.
Okay, sir. And sir, one last question from my side before I join back with you. So you have said that you have almost 800 crores of order book now for your pre-engineered building division. If you can share what kind of... Am I audible now?
Yeah, better. Go ahead, please.
Yes, I was saying you have 800 crores of order book for your pre-engineered building division. So if you can share what kind of timelines are usually there for order book to get converted to revenue?
Typically, they convert 6 to 8 months. About 6 to 8 months. I don't think it's much more than that. Now, again, this is a blend. Some convert in 3 months itself, but the vast majority of it, I think, converts quickly. Was that your question, sir?
Sure. That answers my questions. I'll join back with you.
Thank you. Thanks.
Thank you, sir. We take the next question from the line of Mr. Vikram from Nivesha Investment Advisors. Please go ahead.
Hello. Sir, what is current order book from solar business?
Sorry, could you repeat that question?
What is current order book from solar business?
Current order book of solar, it's about 800 crores.
And what was contribution in last quarter revenue?
Revenue from solar last quarter would have been about 100 crores. It would be about, we don't have an exact breakup for that because it sits in a BU, it's part of a BU, but say around 70-75 crores.
70 to 75. And what was margin on that?
Margin as in, we don't report segmental PBT, but we have a base where less than a certain percentage operating profit we don't. Each business is a different number. So specifically that business, we will not be able to give you a margin.
Okay. Thanks, sir.
Thank you. We take our next question from the line of Mr. Dilip Sahu, an individual investor. Please go ahead, sir.
Yeah, hi, Mr. Aditya. Congratulations, very good set of numbers all round. You just talked about solar business pending order is 800. Where does it sit? Does it sit in pre-engineered building projects or is it somewhere else?
No, it doesn't. It doesn't sit in PEV. We don't, as I said, for PEV, we do provide a segmental breakup, but solar sits in the remaining main company revenue. It's part of that. But obviously, 800 crores order book, not revenue.
Yeah, I know. So I was just wondering, if you have pre-engineered building India, US together is 1,200 crores, and you have a solar business of 800 crores, and your run rate order booking in products is around 350, 400 crores, they are regular businesses. So as we speak, starting 1st of January, we are talking about 2,400 odd crores of pending orders for the quarter. I mean, some of them may not get billed in this quarter, but...
Yeah, so your question, sir, is?
No, so my question is am I getting the numbers correct that solar business is 800 crores?
Broadly, yes.
Engineering business, US and India is around 1,200 crores, plus regular business in the components and products business, which are just run rate businesses.
So Ascent is about 40 to 45 million in terms of an order book. That is as of last
440
month.
crores. 440 crores in Ascent, 760 crores in India pre-engineered.
Yeah, PEB is about, as we said, about 800 crores. Railways is about 156 crores. And solar is about 800. So, yeah. So the math is approximately right, yes.
Yeah, so around 2,000 crores. So, this solar business that we picked up in September, we discussed that it will get billed in 6 months from September, which is basically March end. That is not happening, right? Because we have just hardly billed anything 700 crores, maybe out of the 1,100 crores.
No, we haven't billed that. Partly the reason is because there are delays from our customers on execution on that. I will not name the customer, but they're a large PSU and they have not, I think the land acquisition seems to so we are not revenue for that.
The release you had come up with, which said that 1,100 will get billed in 6 months, that will get delayed to Q1 next year, right?
At this point, I can't give you a lot of clarity on exactly when those specific orders will pass out, but I do have every confidence that those will pass out.
They'll pass out, and even not partly, because it's a turnkey project, so you won't even bill partially or you won't recognize the revenue at least.
I'm not saying we won't, but at this point, I can't commit to the exact values.
Understood. The second question, so this 1150 crores is most likely will be a carry forward for next financial year, partially at least, majority partially.
Are you talking about our pre-engineered building order book?
The PSU energy company which we picked up that 1150 crores.
Yes. My expectation right now is that it's for next financial year, not really this financial year. And that's okay because we never really factored in.
No, I'm just trying to get a clarification.
Yeah,
I was assuming that Q4 will be 1,000 crore quarter for us because I was assuming that a lot of it will get built.
Yeah, I don't believe that. As of this now, I don't have that clarity to tell you whether we will execute in the fourth quarter or not. But I can tell you fourth quarter will be quite early.
No problem. The standalone and consolidated revenue in 9 months is the difference is 500 odd crores. Can I assume that is mostly US out of the 500 crores, say 450 odd crores in the US?
Yeah, 90% of the consolidated numbers vis-a-vis the standalone numbers, if you see, comes from the foreign subsidiaries. We don't have any big Indian subsidiaries here.
Understood. So I can safely assume that around 400 crores will be clean buildings and 100 crores will be your components like hydraulics and tubes and stuff like that. Is that the correct assumption?
International revenue? No, that revenue gets recorded in the main entity itself. In the standalone entity.
Yeah, my second question is regarding these tubes.
May we request you to join the question queue, sir? As we have participants waiting for their turn.
Okay, sure. Okay.
We take the next question from the line of Mr. Hari Kumar, an individual investor. Please go ahead, sir.
Good morning, sir. My specific question is regarding this water treatment business. Sir, like, is there no focus on the management side on this business because other companies are making huge turnovers in this water treatment?
Yeah, I will say that at this point we have an order book in water EPC. Specifically, our capabilities are in industrial water treatment, desalination, ETP, effluent treatment, effluent recycling systems. We are executing our order book out. We are working. We are not looking at this business as a business unit we want to grow. And there are others, our competitors, who are doing quite well. Yes.
Okay, sir. Thank you, sir. And the second question is regarding this standalone, most of the profit is coming from a subsidiary company. Like, why is the standalone profitability not improving, sir?
I think there are improvements in standalone profitability and consolidated profitability, and going forward, that will continue to be the case.
Okay.
Standalone profit also increased from 11 crores to 15 crores, if you see on a PBT basis from December 21 to December 22, and that roughly is approximately 40%. There's a growth in standalone as well.
Yes, sir. But compared to the turnover, it seems to be very less.
That's a good point. I think margin expansion in the standalone entity is something that's important, and we are focusing on that. And as we add your revenue, as spoken of BIW, as spoken of whatever we are adding is higher margin. So I'm sure we will continue to see sustained margin improvements as we have for the last 8 quarters. If you see, I think there's been sustained margin improvement. We will continue to work on that for the standalone entity also.
Okay. That is all, sir. Thank you very much.
Thank you, sir. We take the next question from the line of Riddhesh Gandhi from Discovery Capital. Please go ahead.
Yeah, hi. How much is your gross debt and actually your net debt, right now in the business?
Could you say that again? How much is our debt position? It's reasonably flat only. I don't see that.
There has been not a substantial increase in terms of the debt positions that we have, and through working capital measures, we are able to increase. The net debt position is close to 628 crores, what we have gross debt. The net debt, if you add up the cash and bank balances, is close to around 120 crores that we have. The net debt will be 500 crores.
Got it. And just to understand, in terms of the, you all have a plan of reducing the debt, and is the free cash flow, given the overall EBITDA is increasing, your profitability is increasing, would we be seeing the incremental free cash flow being used to pay down exterior debt, or will the debt be remain flattish given the expansion we're doing and incremental low working capital given growth?
So I think the vast majority of our debt, over I would say close to 80% above, is working capital debt. Some of it cash, some of it non-cash. So I don't see any way we're going to escape that. We're going to continue to need these instruments. You can see our debt increase in proportion to our revenue, and what we map it out as is we make sure interest cost is less than 3% of our overall revenue. That's what we try to make sure happens. But what we do also is, as Srikanth has mentioned, set cash aside. So you will see a lot of positive cash flow after operations for this year, and already in 9 months, I think you have seen it. Oh, we didn't do a balance sheet quarter.
Yeah, but close to 100 crores as well.
Yeah, you can say 100 crores cash, positive cash generation this year, for sure.
Got it. Understood. And the other question is with regards to, you'd indicated there's some amount of excess land, etc. You guys are in the process of considering sort of the monetizing. Is there any update on that? Is that actually being actively pursued, or is that sort of actually a longer term aspiration?
As of right now, we have nothing to share with you, but as I mentioned in my last call, this is something that the board takes up and is reviewing. We've already effected a sale of one small portion of our land assets, but we don't see ourselves as a real estate company. So as the board takes decisions on this, we liquidate. But we have no interest in expanding or anything for that land bank. It's an asset that's there. It's good. So we're better off having our assets and manufacturing equipment and other kinds of assets. So we're not actively looking to grow it. What is there, the board will take a decision, and when we have something to share, we will definitely communicate.
Got it. Understood. And with regards to...
Sorry to interrupt, sir. May we request you to join the question queue, please?
Sure. No problem. Okay.
We take the next question from the line of Ankur Agarwal from RC Wealth Solution Private Limited. Please go ahead, sir.
सर टोटल ऑर्डर बुक क्या है एज ऑन डेट आपका ऑल वर्टिकल्स में?
So we had covered that, sir. I think we don't mention combining all the order books. I think is a misleading picture, but as the previous investor had suggested, it's about 1,500 crores, everything included.
और सर इस फाइनेंशियल ईयर में क्या प्रोजेक्शन है, मतलब क्या टर्नओवर रेवेन्यू अटेंड करने का सोचा है?
किसका प्रोजेक्शन सर? नेक्स्ट क्वार्टर का बोल रहे हैं?
दिस फाइनेंशियल ईयर का प्रोजेक्शन कि इस फाइनेंशियल ईयर में कितना रेवेन्यू हो सकता है?
सर हम रेवेन्यू प्रोजेक्शन नहीं देते हैं, पर मैं आपको बता सकता हूँ कि Q4 बहुत ही स्ट्रॉन्ग क्वार्टर होगा, बोथ रेवेन्यू और प्रॉफिटेबिलिटी के बेसिस पर।
एनी कैपेक्स प्लान फॉर नेक्स्ट ईयर?
Yes, we are expanding our PEB in India, PEB in US, our module plant and our body in white business capex.
How much fund required?
We have not finalized our next year capex budget, but we'll get back to you by the next quarter on the exact amount. But we don't anticipate raising debt or anything to finance it.
Okay. Thank you, sir. Thank you.
Thank you. We take the next question from the line of Patanjali Jha, individual investor. Please go ahead.
So I see it, no? Hi, Aditya. Extremely delighted at your results and listening to you for the prospect of the company, not only in the next quarter, also subsequently. Really proud of you and the management and the way you have handle the situations in the past. I have a very limited one question. In the past, you did so well with the ICF. Do you have any plans to go back? Because there's so much of capex happening there, and it's a prestigious project with a decent margin. Just your take on that.
So, firstly, thank you for your words. Regarding ICF, your question, we currently have an order book, but it's not translating into revenue. If the Integral Coach Factory, Modern Coach Factory, and other manufacturers want to expand their order, I mean, they give us more orders and that translates to revenue, we absolutely retain and have those capabilities. We have very substantial assets. As of right now, I have no clarity on that business unit. And as you said, it's a prestigious project, but what's important for us is sustainability of our revenue, reliability of our revenue streams. At this point, I don't have that clarity in terms of, on paper it looks good, but we can't depend on that. Ultimately we have a job to do. So I have no sunlight on that, sir, right now to give you.
Okay. And one more area we just wanted some ideas on is this opportunity is there in many places. So any chances of us expanding our footprint in the railways opportunity, or we stay focused on what we were doing in the past cycle?
No, so we are right.
Applies to the defense area.
Yeah, so our current value proposition for railways is end walls, fabricated structural assemblies for coaches and wagons, effectively end walls, side walls, roof, underframe assemblies, front parts. So it will continue to be that. Even for newer train sets like Train 18, Vande Bharat as it's called in the media, we have strong capabilities. We will continue to sit on that. There is some revenue happening, but it's about, in this year, I doubt it will cross 200 crores, for example. But our expectations are higher. Hopefully it translates. But as of right now, I don't have any confidence that that's going to happen.
And anything to share on the defense front?
I've explicitly been told by my customers not to discuss it.
Okay, fine. Thank you and all the best. Keep up the good work. Thank you.
Thank you, sir. We take the next question from the line of Deep from Investments. Please go ahead, sir.
Yes, thanks for providing me the opportunity again. Sir, I have one more question. So I was seeing your gross block. So it is almost 1,000 crores in FY22. So if you can share a breakup, how much out of the 1,000 crores is for your pre-engineered building division? And subsequently, if you can also share what kind of working capital you have for your steel building division.
So for pre-engineered buildings in India, we have about 100 gross block, or net gross block would be about 172, both combined. So 172 is the gross block for the entirety of our pre-engineered building business. What was the other question, sir? Sorry.
Working capital for this division.
Working capital for the business. It's about 2 months of working capital.
Okay. Thank you.
Thank you, sir. We take the next question from the line of Deepak Poddar from Sapphire Capital. Please go ahead.
Hello.
Go ahead, sir, please.
Yeah. Thank you very much, sir, for the opportunity again. Sir, I just wanted to understand on the railways front, I mean, do we take direct orders or we do, subcontract? I mean, in terms of capabilities, you mentioned we have strong capabilities, right? So are we making effort to kind of, because railway is one area where we see a lot of potential, right, in terms of the order inflows that can come in, right? So how do we look at it?
So orders are there, sir. As I mentioned, we potentially have orders for the next 1 year also already. But as I suggested, for whatever reason, it's not converting to revenue. And our orders are directly from PSUs such as Integral Coach Factory, Modern Coach Factory for coaches. For wagons, it's denominated by the private sector. So our customers are Titagarh, Texmaco, Desco.
Okay. But do you see that traction can build over next maybe 1 to 2 years, or will it be difficult for you to say?
I think I want to be careful that I say what's important. What's important, sir, I think, is that there's a lot of clarity in how they want to roll out their own rolling stock plans. I think if there's execution on the planning, there's no problem. I think they're all hard at work, but there's also the privatization versus not privatization. So I think once there's clarity on what they want to do, I'm certain that it will come. But as I had mentioned, for us, we can't wait for that. We can't wait for that for growth. So I think we have to ensure that that we scale irrespective of whatever happens with railways. And that's our plan. We're not counting on railways to grow our revenue.
Correct. Okay, fair enough. I understood. And so my second question, I think earlier in the previous calls as well, I think we had an aspiration of 5% PAT margin, right? Maybe. So what sort of timeline we might be looking at to achieve those kind of margins?
So I think if we continue on the path we are on for the quarter-on-quarter improvement, quarter-on-quarter sustainability, replacing bad revenue with good revenue, I'm seeing our ability to reach that is actually quite strong, but it may take, I would say, a year and a half would be when we would be able to reach that. And it's not like 5% is a very high margin, but it doesn't end at 5. We should look beyond that as well, because...
Yeah, but currently I think we are at about 3%, right? I mean, so next stepping stone would be at least a 5%, maybe then we might look beyond, right? Yes,
exactly right.
And that is 1 to 1.5 years is what we envisage.
Yes, sir. I can assure you we're working on it on a quarter-on-quarter basis. We have margin expansion is very important for us.
Fair enough.
So we will continue to work on it, but we haven't set a time that 1.5 years we will definitely do it. But I'm certain that you will see quarter-on-quarter improvements, and I don't see a reason why 5% and beyond is not achievable based on our current product profile and our.
Fair enough. That's quite heartening to hear, sir. Yep, that's it from my side, sir. Thank you very much.
Thanks.
All the best.
Thank you. The next question from the line of Mr. Gohet, sir.
Yeah, thanks for the follow-up. 2 questions, Mr. Aditya. One is a clarification. This pending order book that you are showing, I just want to reiterate one. The PSU bill is around 1,100 crores, which very hardly anything is billed, so I'd say 1,100 crores. And India PEB is around 760 crores, and Accent is 440 crores. The total comes to around 2,500 crores, only the 3 of them. So am I correct, or am I making some mistake here?
No, you're right. You're not making a mistake. I think I misspoke.
So we have in these 3 only, the PEB and the PSU business itself is 2,500 crore of pending orders as we speak. Plus there will be some normal your compromise. Okay, so that's good. Yeah, my question is regarding steel tubes and the expansion. There's a huge tailwind, including TI industry. As you know, they have announced a 150 crore expansion of the steel tubes, and pretty much everybody I talk to are talking about expansion, investment, capex, and all. We have very minuscule capacity in steel tubes. I understand Valchal, we had got a small pilot plant or something. So any idea in terms of tubes itself has been quite stagnant for 3-4 years for us, when everybody is talking about 40, 50, 60% growth. So a commentary on the steel tubes business and expansion in that Valchal factory and tubes business in general will be appreciated.
Okay. First, clarity on the order book question you asked, sir. So you're right, I misspoke. It is what I said when I said 1,500. I didn't include the PSU order book. If you include that, then yes, it goes to the number that you mentioned. Now, as far as our plans for tubes are concerned, we believe tubes is one of our good growth verticals, and you are right regarding TI's recently announced project to expand their large diameter plant, which is in Tirthani, and they're spending about 180 crores on that. We will also be expanding into large diameter tube in the next financial year. As of right now, we have not finalized that as a project, so I have no details in terms of either capex or capacity which we are, but we do believe this is a good market for us to be in. Our tube manufacturing currently will encompass CDW only and not ERW. In CDW in India, we would be number 2 behind Tube Investment. I'm sorry. But yeah, obviously, if you look at the entirety of the tube market and you combine ERW and CDW, then we are a very minor player. But the value addition, the more precise products, the higher margin products are all in CDW. Even TI, the majority of the sale is CDW and not ERW. So that's the path we're on. We're at about 20% of what TI is at right now. We will scale up. There's plenty of market size for us to grow into. We will be working on implementing a large diameter tube project very soon.
So next financial year, we will see some investment going to steel tubes.
We will give you clarity on that the moment we finalize our plan, sir. But at this point, I will definitely say the large diameter tube capacity is definitely something we will expand into.
Second question is regarding the services business.
Sorry to interrupt, sir. May we request you to join the question? We have participants waiting for their turn.
Sure.
Thank you.
Okay.
We take the next question from the line of Mr. Gaurav Agarwal, an individual investor. Please go ahead, sir.
Yeah, thank you for the opportunity, sir. Sir, my question was with regards to other income. So if there is a substantial jump on a 9-month basis. So how do you see, what are the key components of this other income, and is it sustainable? And if not, then, what is the trajectory going forward?
See, there are various streams of other income where it comes. Predominantly, there's an account of the amount that we are sitting on treasury and the cash and bank balances. That's where the amount comes from. And also, the other income that we have is an account of foreign exchange fluctuations that we had volatile. Last couple of quarters, there was volatility, so we had some exchange gain. But this may not be the scenario which will repeat in the future.
So, sir, of the 9 months other income of 35 CR, how much it would be on account of foreign exchange?
Foreign exchange fluctuation is close to around 15 CR there.
Okay. And sir, when you give your PAT guidance and for FY24, you want to perform better than FY23, so you would obviously take into account all these things, right? Like other income which was unsustainable, like forex income, it won't be a part of next year. So you take all those things in account, and then you give your not guidance per se, but your aspiration for FY24.
We generally do not give.
No, I think the question is regarding the reliability of other income. We are quite sure it will be. I think when we do our pricing, we are quite clear what margin we want to sell our products at. our margins will be sustainable, sir. And whether other income comes or not, these are components of an entire margin that come in. We will ensure margin protection, if that's your question.
Okay. And sir, of this 35 CR, just harping on it a bit more, is there any write back component also, like there are some provisions that you keep making, on a quarterly basis? So would some write backs also be a part of this? And if yes, how much would that number be for 9 months FY23?
Yeah, the write backs are a certain part of it, but those write backs and this foreign exchange fluctuation will not repeat per se, is what I'm saying. What you would repeat is basically the treasury income that we are sitting, which is in terms of bank deposits and other income what we have. The foreign exchange fluctuation, if the fluctuation happens, it is. But both this gets factored when we sell to the customer and what we receive. That's the difference, and at the quarter end, whatever the recognition we have that difference. But it is more to do with the exchange fluctuation rather than repeating every time. Does that answer your question?
Yes, sir, it does. And just one last question on the monetization front. Do you have, near-term goals in terms of monetizing some non-core assets or land assets? And if yes, how much could be the quantum? And in case you don't want to monetize them, what could be the quantum otherwise, for these non-core land or non-core assets?
I think I'd answered this question previously, sir. We currently don't have a plan to commit to you on a liquidation of our land assets, but we don't see it as a core asset for the company. So as we have plans, we already liquidated some portion. As we have an idea of what we're going to do with it, we will communicate it to you. But the board is discussing this issue, and once we understand it better, we'll get back to you.
And so just the quantum, if you could share that number.
Quantum, there's substantial land assets in the company. The valuation of that is market determined, but within the company there are in excess of 300-400 acres. So
okay.
Yeah,
conservatively 300-400 CR is what I can take.
I would not be able to comment on the exact valuation of our land assets.
No problem, sir. No problem. Thank you so much, sir, and thank you for providing clarification on other income.
Okay, thank you.
Thank you. We take the next question from the line of Mr. Gaurav Sachdeva from Pennar. Please go ahead, sir.
Sir, could you throw some light on the acquisition we did in France? What's happening?
Sorry,
acquisition in France. Acquisition in France.
Oh, acquisition in France. Cadnam is in the aerospace field. We are hard at work trying to scale that business up. I think last quarter I mentioned that we will give you a little more clarity. So they are now achieved profitability. Numbers are very small. For us, it's about building Europe out into a bigger market. So both our engineering services revenue and our aerospace machining business revenue is growing quite well. Cadnam also gives us a lot of capabilities in the automotive tooling space, which they also specialize in. So it's work in progress, but over the course of the next year, I'm certain we can make this into a big driver of our revenue and profitability in Europe. But right now it's early days, but it's profitable. We have met our expectations from the acquisition.
So what kind of revenue we are looking in FY24 from this acquisition?
I would not be able to give you the exact breakup right now, sir, but it is low. The entirety of our Europe revenue would be close to about 60 or 70 crores for the year. It's low.
Okay. And so just I'm new to this company, just I wanted to know what exactly we do in the solar vertical of our company. We just share something.
Solar vertical, what exactly do I think PV module we just started.
So solar, we provide module mounting systems, tracker solutions, and module manufacturing.
Okay, so we are into manufacturing also, modules, right?
Yes, we are.
Okay, thank you. That's fine. Thank you.
Thanks.
Thank you. We take the next question from the line of KC Puvana, an individual investor. Please go ahead, sir.
Hello. Hello.
Hi, go ahead, please.
Am I audible?
Yes, sir, please.
I have been an investor in your company since a very long time. So far, I have not received any dividend, any rewards for my investment. Is there any proposal of giving any dividend in the near future?
So dividends and any other corporate actions are decided by the board, and the board takes the decision it feels are appropriate from time to time. I am thankful for you for being a long-term investor for the company, and once the board has something to share, I will convey that to you, sir, once a decision has been made. I will say that we have completed a buyback, a substantial buyback in the last financial year, and we continue to debate these at the board level. But thank you again for your support. I do mean that, sir.
Thank you. Thank you.
Thank you, sir. Ladies and gentlemen, that was the last question for the day. I would now like to hand the conference over to the management for closing comments.
Sir, thank you for your presence and for your questions. We will continue to do the work we have set out for us, and hope to close the year out strongly from a revenue and PBT point of view as well. Thank you so much for your questions.
Thank you. Ladies and gentlemen, on behalf of Phillip Capital India Private Limited, that concludes this conference. Thank you for joining us. You may now disconnect.